Hello guys, you're welcome to my channel. This is SyntheticGoddess. In this channel I teach strategies and I make my weekly analysis for a directional bias for everybody. So if you find this interesting, kindly hit on the subscribe button if you are new to my channel. So in this particular video I want to share my directional bias for volatility 25 index. This is a volatility indices trading. It is a synthetic trading, not currency pair. So here I'm sharing my analysis, my directional bias for this particular instrument. So here I'm just going to start my analysis from the weekly time frame, like we always do. Remember, we always go to weekly time frame to analyze so that we can get a full information about what is happening in the market. So here there is not so much information over here. We just have a one-time break of structure yet. We are still in a one break of structure market. So this is just the basic break of structure. This is the normal break of structure on this particular pair. So I just marked that out. So yes, after marking that out, I mark my internal structure. I mark my last internal structure break, mark it out, and after marking out my internal structure break, it has shown me that we are in a downtrend. We are in a total downtrend. So I just go to my daily time frame and then I continue the rest of the analysis. So over here I just calculate my structures. I calculate my structures to be able to know what I am doing. So we have this high, we have this low before the creation of this high. So I'm marking this out as my last break of structure to the upside. I'm marking this out as my last break of structure to the upside. And where is the low that created that break of structure? Where was the low that created it? So we have this low here. So I am marking it out also. I am marking this low out. I'm marking this low out also. So this is the low I am not expecting the market to violate. If the market violates it, then it simply means we are in a downtrend, a short-term downtrend. Okay, we are in a downtrend. Yes, but this is our major low for break of structure. So here is the low that was formed before we had the break of structure to the upside. So I am not expecting the market to come back to violate this low. If this low is completely violated, it simply means we are in a downtrend. If this low is violated, we are in a downtrend, and the market went to the upside, came back and broke this low, which signaled that we are in a downtrend. We are in a downtrend over here, seeking for this low, since we are in a total downtrend on the higher time frame. So we are seeking for this low. We are seeking for this low. We are in a downtrend from here. So after the market broke that structure, we had this move to the downside. So over here I just calculate my structure. I mark out my break of structures. Once I am able to mark out all the break of structures and how the market respected the PO highs, then I am good to go to another time frame. So I just mark out all the break of structures. We had the break of structure over there. So after that we have another break of structure here, then another break of structure here. I have another break of structure here, Then there is another break of structure here. There's another break of structure here. So here are all the informations I am going to be needing, and I have marked them out. So I just marked the PO high that was respected. The PO high is respected. I just mark out the PO high is the market respected. So over here the market used a secondary PO high to move to the downside, and we used a primary PO high over here. And over here the market used a strong zone to move to the downside, and here the market broke structure. We had a change of character here. There was a change of character over here. We had a change of character over here. So all these are the things I am going to consider whenever I am analyzing the market. So it's going to give me a whole lot of information. I don't want to assume what the market should do. I don't just want to jump into the market and pick a trade. So I am going to do a thorough analysis from the higher time frame till the lowest time frame where I'm going to take my trade. So on this daily time frame, I have marked out the necessary places. I have marked out the PO highs. I have marked out the break of structures, and I have marked out my change of character on this daily time frame. And why I am considering this as a change of character, why I consider this as a change of character, is because, as you can see, we have swing points before this market broke this particular high. So I am considering this as a change of character. But a change of character does not mean we are in a total uptrend. That does not simply mean we are in an uptrend. So we can have a change of character and still have a break of market structure to the downside. We can have a change of character, still have a continuation to the downside. Yeah, so change of character doesn't really mean we are in a total uptrend until it gives us a good change of until it gives us a good break of structure. That is when we are going to classify that as our break of structure. Change of character is not break of structure. It does not imply a total break of structure. So after we had that change of character, the market came back to this primary zone. The market came back to this primary zone, to the source. The market came back to the source, and we had break of structure. We had change of character, sorry. We had another change of character to the upside without breaking this low. We had change of character to the upside without breaking this low. This low was not broken. This low was not broken before a change of character. This low was not broken before a change of character. So this actually meant a whole lot to me, because why will this low not be taken and then we will have a change of character again? It simply means that we might see some moves to the upside. We might see some moves to the upside before we come back to break this low. We might see some move to the upside, since this is a change of character without this low being taken. This low was not taken. We respected the low and we came back to break this high. We came back to break this high, and after breaking the high, since it is a change of character, the market came back to use an untested zone here. The market came back to use an untested zone here. So I am marking this place out also, and we had a break of structure to the upside also. We had a break of structure in this internal range. We had a break of structure in this internal range to the upside. We had the break of structure to the upside on this internal range. So what else am I supposed to do? I go to my 4 hours time frame. Meanwhile, before going to my 4 hours time frame, I check my daily time frame on where the market might actually be seeking for. I check my time frame, or where the market might be seeking for. Now we have an internal break of structure here. We have an internal break of structure here, and any structure formed outside break of structure is range structure. So for this particular range structure here, for this move here, we have our range structure starting from here. The range structure started from here because we broke structure to the downside, and this is a range structure. It's formed outside it. But by looking at this total break of structure, this is our range structure. Here is our range structure here, because it's formed outside the break of structure. So I just go to my daily time frame and then just consider where the market might actually be seeking, or the liquidity the market might actually want to take. But I am just going to trade whatever the market gives me, but I'm just going to look at where the market might probably want to take. So the market might decide to come and take this high and continue with a PO high around here, or the market just move to the upside and come back to my source. But that is not going to happen until we have a valid break of structure to the upside. That is when we break a valid place over here. That is when the market is going to move to that extent. So here I am just going to trade what the market is giving me. So here on my daily time frame, it is showing me that we are in a buy move. We are currently in a buy move because this is a break of structure to the upside within this range, and that is what I am going to be following. So I just check my 4 hours time frame, and then I am looking for a buy move. Currently to take out an external high, or to take out my external high. That is what I am currently looking out for. So my last break of structure was to the upside on daily time frame. I am going to be seeking out for my PO highs to use to continue to the upside to take this high. I'm going to be looking out for a PO high to use to continue to the upside. So here is my primary PO high. My source. Here is my source, my primary PO high. Here is my primary PO high, and I have my primary PO high over here. I just wait for a confirmation. Before I just decide on what to do. Then inside this structure, I have a break of structure to the upside from here. The market cannot come here until this low is broken. When this low is broken, then we know that the market is seeking for the primary point of interest. And when market gets to this area, you wait for a confirmation. I trade based on confirmation. I only trade based on confirmation. Don't just enter the market because market got to a PO high. Wait for confirmation. So I just wait for a confirmation around this place, and then it will signal to me to buy or either not to buy. It might signal to me to buy, and it might signal to me not to buy and just hold on. So that is why you really need to wait for a confirmation. We had a break of structure to the upside over here, and we still have this place not so much tested. So the market might get to an area here and then just decide to move to the upside. But I rather wait for the market to get here, because I trade just the primary zones. I wait for the market to come back here and give me a confirmation. So before you trade this area, at least you should have a strong confirmation. You should have your trade pattern, and you should have your chart pattern before you just enter the market. So personally, I just wait for the market to come here, give me a confirmation to either continue to buy or if I am not to buy. I just wait patiently. Remember, market is 10% buy, it is 10% sell, and it is 80% of waiting. So you have to calm down, you have to be patient, please. So kindly be patient whenever you are taking any trade. Wait for confirmation before you take it. So once my market gets here, once the trade gets here, I look at my 1 hour time frame. And then I check for the alignment. I wait for the chart alignment. I wait for the time frame to align, and then I take my trade. I wait for the alignment of the trade, and then I pick my trade, and then I am good to go. And I just seek for this eye. I seek for the market to take this eye. And once it takes it, I am out of the market, and I wait what the market will do next. So that is what you should also do. I got my 15 minutes time frame also, and I check if it is worth trying, if the trade is worth taking. If the trade is actually worth taking, then I calculate my risk on the 15 minutes time frame. I just make a calculation of my risk, and then I enter the market with the normal lot size. So that is what you should do also. So this is going to be all for this volatility 25 index analysis. Thank you so very much for staying through. I love you guys. Bye. See you in the next video.